Alright guys, you wanted me to talk about it, so I'm going to talk about it. Let's talk about the VA loan. Alright, this is one of my favorite topics. It's one of the things I'm most excited about, and it's also, honestly, one of the things I'm most sickened by. Because there are 18.5 million veterans in the United States right now. There's 1.5 million active duty members of the military right now. That's 20 million people. And you know how many of those use their VA loan? Less than 13%. 13%. Which is insane, because the VA loan is, I am not kidding, it's the most powerful wealth building instrument that's ever been made available to normal people in the history of the United States. And I've got overwhelming amounts of stats to back that up. And less than 13% of our brothers and sisters use it, which is, it's insane. Because you have this group of people, 20 million people, that come from all walks of life. And the one thing that they have in common is they stand on a line, they put their hand in the air, and they volunteer to put their bodies in between war and their home. And in my opinion, that deserves you an opportunity to have a fight to live the American dream that you're defending. And part of the American dream is financial freedom. Part of the American dream is having a home and having some money in the bank and being able to actually pursue your dreams instead of worrying about how you're going to feed your family. And I know what I'm talking about because I've been on all different parts of this. I've been on food stamps. I've been, in the struggle, and I've been in a place where I feel comfortable and I feel like I'm able to pursue my dreams. I've been in all the different parts of this, and I can tell you that when you're struggling and you're trying to make ends meet, you're not too concerned about the lofty notions that you had as a child, and that's horrible. And it's sickening, and it doesn't have to be that way. So that's one of the reasons that I'm so passionate. Like, I've created a company called White Feather Investments, and the sole purpose of it is to help military people create financial freedom. I work very closely with Sentry Residential. Their mission is to help military people achieve financial freedom so that they can impact their communities and they can live, like I said, lives that are worthy of the dreams that they had whenever they signed up to join the military. So, what does this have to do with the VA loan? Quite simply, in my opinion, that's the first and biggest step, because the VA loan is incredibly powerful. The United States government got together and they said, all right, check this out. We need a way to honor our veterans. We need a way to make sure that our veterans understand that we believe in and we appreciate the sacrifice that they've made. And so we're gonna offer this VA loan, so that no veteran ever has to go without a home. That was what the sentiment was behind it. And I agree with that. I think it's great. But it's just the start. That is just the beginning of what the VA loan actually does. So here it is. The VA loan is a zero-down loan option that's not available to civilians, meaning 99.5% of the population. It's not available to them. It's available to people whenever they join the military. So as soon as you graduate boot camp, or or college, or the Naval Academy, or West Point, or whatever, you're eligible for the VA loan, and that eligibility stays with you, right? So the VA loan basically says that you can buy a house for zero down. There's a lot of other stipulations I'm going to go over, but this is the big one that I want to focus on right now. $0 freaking down, and I'm not talking about $0 down, but then you pay all these other fees. That's not the case. Yes, there's a VA funding fee, but you can roll it into the loan. Yeah, there are closing costs, but you can roll them into the loan. You literally can buy a house with zero money out of pocket. And in fact, if you've got a good real estate agent, they can negotiate seller concessions from the seller, and you can actually receive money. You can have more money in your bank account after you've bought a house than before you bought a house. I've seen it happen over and over again. And why is this important? Because you also have BAH, which is money that the military gives you tax-free to pay for housing. So you can take this tax-free money that the military gives you and use it to pay the mortgage on this house that you put $0 into. And what happens with houses? We've talked about this before. What happens with houses over time? They go up in value. What happens with your loan, your mortgage loan over time? It goes down because you're making the payments on it. And you also get good tax benefits. So, despite this hurricane gale force wind that seems to be like ever present in my backyard, you can't stop me from being excited about what this VA loan offers, because you have it. Let's just say you're here in Southern California at Camp Pendleton, and you go out in Oceanside and you link up with a real estate agent and they find you a house that's worth $500,000. And yes, that's a fairly normal going price here in Southern California. $500,000. If you were a civilian, you'd have to come up with at minimum 10% or more. But let's just say it's 10%. That's $50,000 plus closing costs, plus all of the extra fees that you have to pay. It's probably somewhere in the vicinity of $55,000 or $60,000. Who has $60,000? What normal person do you know that's just like, yeah, sure, I've got $60,000. Let's go ahead and put that down on a house. Not a lot of people, right? So the average civilian in that situation wouldn't be able to actually buy a house, so they'd rent, right? But because you're in the military, because you have access to the VA loan, you can get approved for $500,000 at zero down. All you have to do is have an income source that qualifies, and they're very, very favorably, they look very favorably on military income sources, obviously, and you have to have decent credit. And you close on this house, and you pay itself off, and it appreciates over time, and you're using tax-free money to do it. So right there, and I've talked about this before, the average difference in net worth of a homeowner versus a renter is 44 times. 44 times, and this number goes up all the time. It used to be 40, used to be 35 before that. It keeps growing and growing. The difference between the wealth gap of homeowners versus renters. You have that ability. You have that ability to be a homeowner. And I know the question that you're probably asking is, well, but what about when I PCS? I'm invariably going to PCS. Yes, you are. And the VA knows that. So they say that if you PCS, no problem. Just rent it out. Or you can sell it, right? You can sell it if you want to, capture the equity and go do what you do. Or, even better, you can rent it out to 1 or 2 or 3, whatever, other military people or anybody, but I like renting to military people who are stationed at that base and they want to save a little bit of money. So maybe it's 3 lieutenants that want to all just rent a room, basically. And they're each paying a portion of it, and let's just say you could get them to pay the amount that it needs to pay your mortgage. Is that a smart idea or not? If you said that it's smart, you're right, because you have a house now where these people are paying your mortgage, which means they're paying that house off over time and it's continuing to appreciate and it isn't costing you anything, right? And then you go to your next duty station and you have 1 of 2 options. You can either rent there or potentially put money down and buy or whatever you're in a position to do, or here's the really cool part. If you've built up enough equity in this house, you can refinance it into a traditional loan, right? A non-VA loan, and that frees up your VA loan, and then you can go buy another house for zero down. This is how people in the military get 4, 5, 6, 7 houses, all putting zero down, and then at the end of their career, like that guy I talked about back at the academy who sold off his houses and used $1 million to buy a house in Coronado. Let me give you this example, and then I gotta wrap up and we gotta go, right? There's lots more information on this. The $500,000 house I just talked about, let's just say you bought it and you lived there for 3 years, your tour of duty here in Camp Pendleton. And it appreciated at 5 or 6% per year, which is not unusual, right? 5% of a $500,000 house is $25,000. So let's just say it appreciated at $25,000 the first year, and then the next year it's 5% of $525,000, which is gonna be right around $30,000. And then the next year it's 5% of $555,000 or $560,000, which gets you approximately close to $600,000. So now this house over 3 years has gone up to $600,000 and you've paid down. You started with a $500,000 loan and let's just say you paid it down. Roughly, these are rough numbers. Let's say you paid it down to $560,000, right? And you now have $140,000 worth of equity. Well, you can refinance into a conventional loan and use that 20% equity as justification for it being a conventional loan. So you can refinance in roughly similar terms, right? So you're basically just refinancing and you're gonna have right around the same payment every month, maybe even a little bit less, and it frees up your VA loan and then you can go use your VA loan. So now you've got this effectively a rental property that is being rented out, and you've got your VA loan that you're now buying a house and living in and building equity in that one too. And remember, now that this one is a rental property, yeah, it's a $600,000 rental property, but now that it's a rental property, you get all 4 benefits again. Remember, potentially cash flow. Here in California, maybe not so much, right? Maybe $100 or if that. But it doesn't really matter. Because as long as they're paying for the expenses of the house, your money, you're set, right? Because you have appreciation, you have principal pay down every single mortgage payment that's made, you owe less on that house, and it speeds up over time. Appreciation that just keeps going, because now it's appreciating at 5% or whatever it is of $600,000, and it just keeps going and going. Take a look, just go on Zillow and take a look at areas in Oceanside or Carlsbad back in 2009, right? 2010, 10 years ago. Take a look at a house then. This house here, this is my house actually that I'm filming at. This house here back in 2009 was worth like about 60% of what I bought it at. So yes, I wish I had bought it then. But and to be honest with you, I'm embarrassed that I didn't use my VA loan sooner, because it's crazy how much opportunity exists with that. But if you have that $500,000 house that I talked about and you treat it now as a rental, it just keeps going up in value. You have tax benefits now. You get, some cash flow potentially, right? I'm not even gonna get into short-term rentals right now. I'm not even gonna get into renting them out as a short-term rental, which people are killing it doing, right? Just even as a long-term rental, even if you break even every month, you're still growing wealth. And if you do this over and over, guys, you can use the VA loan to parlay yourself into financial stability and then eventually into financial freedom.